Hi, this is Mark Principato, and welcome to the SMB Forex Daily Review. Let's begin here with the dollar index. All right, it's the first index that I post on Twitter each morning. Now, what we have here on this 4-hour chart is we have a pretty bullish structure. All right, since June 29th, we've made a higher high, a higher low, and today we attempted to break that high. What's important about this structure is this higher low. This is a structure that implies further strength. Now, the levels that I put in this morning are important, of course, because they're still in play. As we pull back here, all right, the first level I'm looking for buyers to re-enter this market is around 83.50. All right, we have a pivot there today. We didn't make it that far today, but that doesn't mean it's over. All right, we still have the Asian session, and perhaps the next London session can take it into this area, which implies further strength for euro dollar. If this level is taken out, we're looking at the 83.10 area. All right, that will still keep this bullish structure intact, so keep that in mind. Now, let's take a look at this on a smaller time frame. The stock market opened here on this red line. That was 9:30. Since then, the dollar index was just getting weak all day. We even attempted to bounce at some of these fib retracement levels, at least the 618 over here. We fully retraced this upward movement and attempted to bounce as well, only to be met with resistance around this pivot point, which should have been a support earlier, became a resistance. Now, the current candle, or the one just closed, we have this little doji-like, hammer-like candle on a 30-minute chart, which implies some possible strength maybe coming back into it. We could get a reversal there. But again, there's really nothing special about this area. If I was looking to go long dollar index or short something against dollar, like euro dollar, I would wait for a more definitive level, like this 83.50 area. Alright, so that's pretty much where we are with the dollar index. Generally, it's strong. It just needs to pull back a little further. Right now, we have this bearish momentum that's still in play. You can see that by just drawing a trend line that connects the recent high to this higher low area. Alright, now, let's take a quick look here at the S&P. The S&P has been range bound now for, I'd say, a good couple of days. We started out 2 weeks ago by making this high up in here, the 1376 high, whatever that is. We had a nice little pullback to the 1320 area. Since then, we retested that high. Right, that was done on Thursday, I believe, Wednesday night, Thursday, whatever that was of the previous week. We have been selling off ever since. On smaller time frames, this is going to look pretty bearish, but on larger time frames, you can see we have not made a new high, and we have not made a new low compared to this swing low. This tells me that right now we're in a range-bound condition. All right, it's very indecisive. We need some market direction, and the market's going to have to let us know what that is. The levels that are here are still in play pretty much. Let's talk about them. So as the market unfolded today, we broke through the 39 to 41 support area that I had pegged over here, only to bounce off the S2, 1331. All right, and that I would say was a relatively quick bounce, because we can see we had that large bearish candle followed by the bullish one. Now, currently, we rallied back up to this 1350-ish area, and it's selling off as we speak. It's the close of the day. I mean, you know, this could be for whatever reason. I would look at that as noise. Wouldn't do much with that. So the levels that are in play as we move forward from here, I would watch this 39 area support, okay, which could be now, or at least somewhere above 31. Anything can happen between here and there. As long as we keep that 31 low intact, we're range bound. If we take it out, then we're just going to the bottom of this overall range, okay? The range low in that area. If we hold there, again, we're range bound. If we break it, then maybe we have a more defined structure, or at least a more bearish structure at that point. But we can't make predictions. We just have to let the market tell us. Now, if this thing can hold, stabilize, and work its way up, I'm looking at resistance around the 1352. If we take that out, I'm looking at the 1363 to 65 area. These, again, are points where I'm looking for sellers to come back into the market. Will they? I don't know. But if they do, I'm going to be looking for further confirmation, and it may allow me to take some euro shorts as well. All right, so these are the key levels there. one thing to keep in mind when you're in a range-bound market, when you're at the range high or at the range low, you want to look for those failed breaks. All right, those failed breakouts where it attempts to push a little bit lower and fakes everybody out. Those can be some great buying or selling signals as long as the range stays intact. But you have to keep your expectation like that. If you expect too much, you can run into problems. All right, so we'll see when the market gives us more direction. Right now, it's a range-bound market. Let's move into the euro-dollar. Now, euro-dollar levels. We started out by pushing the yearly low, all right, around that 2065 area. The low we made today was 2065 exactly. Since then, we have been rallying. All right, let's take a look here at the 30-minute chart. So you can see we had some inside bars right in this area, sign of indecision, and we have been pushing 15-minute and 30-minute highs ever since. Now, we had a couple of fib retracements in there, which the market kind of hesitated at and broke through. Took us all the way back up to this range high, all right, the high, basically the range of the previous high. We attempted to sell off, but the key thing to keep in mind or to observe in this area was this, the higher low, and this recovery candle. Again, another inside bar, indecision. A weak market should have taken this thing at least back into the middle, at least, right, but didn't even. It recovered, not even in the middle, recovered slightly above that, and back to the high. That to me implies strength. All right, now we have no volume in this market. We have to see how the Asian session plays out into the next London session. But if we break this range high, I would be very cautious on shorts until we get to very particular levels. All right, the levels I would like to see, of course, are the 2165 area is one. Then we have 22 even. All right, so if we hesitate enough at 2165, that might present an opportunity. I would think the London session would be a good place to look for that. All right, a break through that again, you're looking at the 22 area. A break through that, you're looking back at 2230. I mean, I would find it hard to believe that it would make it that high, but if it does, it's another area. So just keep those levels in mind as this thing goes up. Will there be long opportunities on the way up? Sure. As a scalper, you know, if you can find those higher lows, it's not easy, but they will be in there. All right. I like to focus on the major levels to see if there's going to be any confirmations, any turning points, because in my opinion, these levels offer the low risk, higher probability entry points. All right. Now, if we turn from one of these levels, again, we can be looking at a revisit to the yearly low or somewhere at that range low. Keep in mind, if this market doesn't want to make progress, especially at those lows, or if it breaks it by a little, look for the fake outs. All right. It's very common, especially in an indecisive market. The S&P already gave us some signs of that. All right. So that's it for now. If you have any questions, please send me an email at mprincipato@smbcap.com. Thank you for listening. I'll speak to you next time.